welcome everyone to today's webinar. Thank you for joining us here today. Today we'll be talking about insurance infrastructure and the impact in hurricane season, strategies for HOA boards as well as managers. As many of you know, South Florida has seen significant storms, even though we haven't seen anything impact us, fortunately enough. However, we're in the peak of the season right now, coming up on the 17th. We can't let our guard down. We had some major storms hit us around September 28th, such as Ian. We had Hurricane Helen in 2024 hit in the Florida Bend coast in 2024. So we're still in the midst of it. So it's a great time for us to have this webinar and start talking about the important topics and things that we want to make sure that no one misses during this storm. But before we get into it, let me take a moment to introduce our panel. Have the great pleasure, one of the greatest guys that I work with in the industry, both Manny and Matt. But Matt, why don't you start off with speaking a little bit about yourself and the firm you represent?
Sure. Thank you, Rafael, and good to see you. And thank you, Manny, for joining us as well. Appreciate it. I love you guys to death. You know that. So I'm Matt Sangsterin, president of Global Pro Florida. We are an insurance services firm. We work primarily with the condo association world, whether that's from a public adjusting standpoint or on a contractual basis as consultants for anything that revolves around insurance. As you guys know, the legislative environment, the amendments, everything that's changed the landscape over the past couple of years has made it very difficult to not only recover from loss and damage, but to also understand what you have in your policy. I think we're going to touch on that a little bit today. We've gone on a campaign this year with the condo associations that we represent or have represented in the past, with all the property management firms that we work with, especially for Affinity and the associations they represent. We try to help insureds or associations and their boards understand what's going on in their policies so that in the event of loss, in the event that there's a hurricane or something of that magnitude, they know what to do. And ultimately, the first couple of steps are very, very important. And again, we're going to touch on that today from what I understand. So we'll get right to it.
Excellent. Thank you so much, Matt. Great as always to have you on. And Manny from BioResponse.
Hey, Rafael. Thank you for having me. I truly appreciate it. Thank you to everybody that's taking the time right now to listen to us. My name is Manny Pozo. I'm one of the co-founders and the operator of BioResponse Restoration, a restoration company that's been in business over 20 years now. Starting as a crime scene cleaning company, biohazard company. We shortly thereafter starting, we pivoted and started adding on services, water remediation, water mitigation, mold remediation, and then recently, last few years, we've added on asbestos abatement as well to our services. We have a lot of experience working in the hurricane. So even though we have not had one recently here since Irma, we travel every year. We travel every year to the Southeast, wherever there. So we're able to really see the properties that are prepared properly, that have acted quickly and swiftly. And then we've also had the opportunity to meet experts like Matthew out there that we get to learn a lot about, because most of the time we are dealing with insurance and in that environment. And I know Matthew's here to help you out with that side of it. But we're really all about education and really preparing you so that when the time comes, if you need us, we're there, but also that you've done everything you can to help recover and rebuild as quickly as possible.
Excellent. Thank you so much, Manny. It's always great to have you on. As for myself, my name is Rafael Aquino. I'm the co-founder and CEO of Affinity Management Services, a community association management company focused on helping our board members execute their vision. We do that through our proven process, align, execute, deliver. So we're super excited to have you on here today. Before we get into the gist of today's webinar, I do want to mention that we will be posting the webinar up on our YouTube page. We're proud to say we're around almost 1,500 subscribers. So if you haven't subscribed yet, make sure you do so. We recently also launched in an effort, as Manny and Matt have mentioned, of education. We recently launched our Facebook group, so managed by Affinity. Make sure you subscribe to our Facebook group. And lastly, we will have 3 to 4 polls going on to get questions and use some of the today's webinar to either answer questions or understand where you stand with your association. So thank you again. The Q&A is open, so it should be on the top hand side or on the left hand side. Feel free to ask any questions. I'll do my best to gear them, point them to the right individual if they're related to today's topic. So why don't we get started here, Matt? I know you opened up a little bit in your intro about the challenges with insurance companies. I know you're always sharing with me the news that comes out, and this the narrative that gets given many times that filing a claim is the wrong thing to do, and that it's all the theft that's happening in South Florida. So I guess why don't we start there, because I think many boards have that fear of filing a claim and not understanding why they need some kind of representation when it comes to, let's say, a public adjuster, an attorney, whatever route they decide to do. So if you could touch up a little bit on that, Matt, and give our listeners a little bit of education there.
Sure, great. Yeah, thank you. That's a great kind of opening question, because it is the fear that I hear every time I go into a meeting. And when we talk to the boards, Rafael, as you know, and Manny's been to some of those meetings with me as well, right? So, oftentimes there's this deductible phobia, there's this, premium phobia, or an increase in premium phobia, I should say, that is inherent in all those discussions, and a lot of that comes from the insurer side. There's three points I always raise. One, we have hundreds and I should say thousands of claims over the past almost 15 years here at Global Pro. I can tell you there is no rhyme or reason most of the time for premium increases or decreases. I mean, we have claims that are $20 million plus that associations were prevailed on, and they were paid that money when their premiums went down the next couple of years. So it just depends on the situation. It depends on also my second point, which is that the lobby for the insurance industry has been very, very strong the past couple of years. And you see all these amendments to legislation, to statutes here in Florida that guide our industry have been really kind of heavily, favorable to insurance companies lately. And so what that has created or resulted in is the chance for insurance companies to, unfortunately, take advantage of the situation. And so why I bring that up is, we have lots of endorsements or exclusions and language that's changed in the policy forms, which again go back to premium, right, and directly reflect in premium, but they start at the lobby side, right? And these forms have to go through the paces, meaning they have to go to the superintendent, they have to ask for these changes, they have to give their reasons why in a case and present it to the superintendent. And oftentimes, right, that's where the decision is made. So it's not just that you have a claim and all of a sudden your premium goes up. That's an inherent fear in that process, and I understand it, but that's not how it happens every time. There is a whole process behind it. They're never going to send you any type of correspondence or letter explaining that, oh, you had a claim of $500,000, so your premium's going up. They'll never do that because that's illegal. So at the end of the day, you have to think about it from a financial standpoint. So the third point is, as a board member, you're fiduciary. As fiduciary means financial, right? And your job is to meet your fiduciary standard, or in this case, your duty of care when it comes to being a board member. So board members have to think about it as a financial situation. You're using a financial asset, something you bought, a product that you bought to, hopefully alleviate an issue that involves the balance sheet of the association. Hopefully that changes kind of some people's perspectives about, what's going on here. The reason why I say that is because, look, there's certain things you can do, and Rafael, you can certainly expand on this. Certain things you can do as a board to mitigate the cost of it, meaning you can, send out an assessment and have everyone pay their, percentage share of whatever that cost is for mitigation and the loss and damage. But is that protecting the association? Is that protecting the balance sheet? No, you're just passing the cost around. That's not protecting the balance sheet. That's not the due diligence that's necessary, in our opinion, to fulfill your duty of care. And so what I mean is, you can use your insurance policy and you can hopefully get a recovery. That's how you should think about this. Now, to do that, though, unfortunately, like I said, it's very, very difficult today. Representation is needed more than ever. The statistics that are coming out over the past 5 years, especially since we've had Irma, which again was almost 8 years ago now. Then we had Ian. I'm talking Michael really, and Ian, but the big storms were Irma, Ian. Then we had Helene and Milton back to back here last year, and those are really what they're using to set premiums and guide their focus on producing their policies and the forms. So why I bring that up is because, look, we had a hurricane here in Miami in how long? When was the last time a hurricane hit Miami directly, right? Today, though, the industry has taken all the data that we have over the past, let's call it 10 years, and it's affected everybody, right? And so what we have here is high deductibles, lots of sublimits in policies, right? And exclusions that aren't very specific. And we can get into this a little bit later and has to deal with mitigation. And Manny has taken my venting calls on Friday afternoons. I'm sure he hates it, is annoyed by it, but he takes my call and he listens to me vent for however long he lets me go. And we'll talk about that a little bit. But the reason why all that stuff is very, very difficult is on purpose, obviously, right? They want to make it as lopsided and unclear as possible. And then now using words on policies like reasonable. Well, what does reasonable mean? It's whatever they think it means, right? And that's how they're going to make payment. And that's what guides their payment, their loss settlement provisions in the policy, things like that. So we'll get into that specifics later. But again, representation now more than ever is important. I'm going to leave you with one stat to wrap all that up, which I think is very, very important. Let's go back to Hurricane Ian, and then I have more stats for the rest of the storms too. But as of today, okay, Hurricane Ian was in 2022, so it's a good marker. It's 3 years coming up here. There was 475,000 claims from Hurricane Ian. Okay, 60,000 are still open. 68% of them have been closed without payment. Right, we're almost at 70% of all claims from that hurricane had no payment.
Wow.
Now we can get into the data and I can explain to you what was going on with some of them, but it's not the story the insurance industry is telling you. I can promise you that. So we'll get into that a little bit later. But that's a very, I think, a very important point. And I'll get into Hurricane Helene and Milton and Debbie and Beryl, the little ones after that too. So.
Wow, that I mean, I've never heard that statistic. That's pretty eye-opening, because what we get fed is a little bit differently through the media of it's X amount, 1 point something billion dollars, or whatever number they give us, and we're all assuming that those are claims that are being paid. So, hearing that 70% of the claims were not actually paid, it is pretty impactful. Now, I'm going to leave it here with you, Matt, because I think it's important to address this, especially for the managers or the boards that are on the call. So with all you mentioned earlier about all the changes in legislation, and I know we've seen it right from our statutes that get regulated at 718, 720 every single year. What should managers and board members be doing with their policies? Because, it really depends on the agent that you have. I know in our experience, you have agents that are very thorough, sit down with the board, and those are the agents that we really like to work with. And then you have agents that are just, renewing the policy and moving on to their next policy. So how often should boards and managers that are on this call be reviewing their policies? And I'm going to launch a poll at the same time to see what our viewers today are doing are doing themselves.
Sure. Great question again. And if you've heard me speak before, and you guys certainly have, I repeat the same thing every time, which is at least once a year, you should request a certified copy of your policy. I'm sure in your SOPs, Rafael, your managers, are supposed to organize things like this, the important documents that they need to make sure they're running the associations with all of the information at their fingertips. But after you bind a policy, meaning let's say you go through renewal, there should be a 45-day to 60-day window sometime where they actually put the policy together. The actual forms are put together. The policy is now in effect, obviously, and they can provide that to you. So by statute, by Florida law, upon request, you should be able to get one copy a year, and that should be what's called a certified copy of your policy. A certified copy is important because that is stamped and certified by a signatory at the insurer, at the insurance company, meaning an attorney or someone who's designated to be able to do that, fiduciary there. And that is your policy. It's important. I always get the question, why is that important? Because that's your policy. If they miss a form, they leave an exclusion out. If it's to your benefit as the insured, it's to your benefit. That's it. That's your policy. That's what gets judged. If you have to go to litigation for any reason, or in a court of law, they're going to look at this, and that's the governing documentation, right? Like your bylaws, governing docs, or deck pages for your association, right? So now there's statute sometimes that overrides some of that stuff, but at the end of the day, that's your certified policy. They should at least get that out of the way, because if you try calling an agent or really anyone that has an office or needs to use something digital to produce those documents for you, it's going to be hard after a storm. Good luck. Everybody's triaging, right? They're trying to figure out what's going on, where the damage is, what they need to do. It's a hard time to then ask for your policy and so forth. Now, with that being said, I know Manny of Our Response has a similar program. We have a program where we can sign up and agree to what's called our preferred client agreement with associations who want to get us there beforehand, right? So you prep for the storm, you prep for storm season, I should say. We come in and we look at the status of the property, we document it, we take pictures, we drone. There's all these services that we can provide pre-storm. Also, we'll collect your policy, we'll review it for you. We can provide a summary of those coverages, exclusions, sublimits, and endorsements and things like that. And the reason why that's important, obviously, the board doesn't have time to teach themselves what's in a contract policy that's hundreds and hundreds of pages that is supposed to be confusing, right? So the easiest thing to do is to have someone who can, very efficiently, very quickly go through it, provide the summary, and that way you guys know what to do. Now, with that being said, one of the most important things from a policy that you need to know as a policyholder is what are your duties and obligations after a loss? What are your notice requirements and what are your duties after that loss occurs? And so those are things that we can educate and help the boards and the associations with. And with that being said, I would ask, one of the things we can do is help you with your vendor contacts, right? And I would say, hey, go meet Manny, go talk to Buyer Response. If you need anything, especially after catastrophe, that's your team. Give them a call and they'll put you through the same kind of process with their, pre-emergency. I don't want to talk for your agreement, Manny, but they have one too, and that's certainly someone you should talk to. And I talk to them always, and you should discuss with them your needs there.
Sure, great point. I do want to touch on that pre-disasters is so important. Some boards it's easier to get them to sign, and some boards a little more difficult. But the truth is that it's something that's not a commitment, right? It's more of a commitment that we're going to be there for you, that you're going to be there for us, I should say, whenever the services are necessary. And I can tell you from my experience in the past of dealing with even smaller hurricanes, it's very challenging to get with a vendor on the phone if you don't have something already pre-set up, or if you don't have a relationship already with those with that service provider. So if you haven't done so yet, I highly recommend that you reach out. And in some cases, you should reach out already, even if you don't have one, even though we're in the midst of it, just so that you could be on some kind of list. Manny, I want to bring you into the conversation. I know you've experienced as well, sticking to the original question with regards to the changes in insurance, in the policies, I should say, and exclusions now that are being included in some of these policies, where many times, either the manager's not aware of it, which they should be reading those policies, or working with someone like Matt to review them. But what are some of the exclusions that you see, and what are some of the pitfalls that managers and board members should have their, should know where they stand today in case that, we're in the midst of hurricane season and something pops up?
Yeah, I think, and I know Matt can attest to this, it was something we were seeing a lot last year, is these extremely high deductibles. It totally changes the relationship between the insurer and the policyholder, and then also the vendor. Before Hurricane Ian, I would have never have asked for an association to provide letters of credit, what the reserves are, and many other questions on the financial viability beforehand. Since the changes and since the legislative changes, now it's an absolute necessity. There's no guarantee that your insurance is going to, number one, cover a hurricane. We've seen it. They actually just straight up deny you as if there was no hurricane. Then there's the high deductible, as I mentioned, changes that relationship, because now you have to meet a deductible. And some of them are, we've run into multi-million-dollar deductibles, and it would be extremely difficult for that building to even meet that. So the building, or the HOA must realize that simply means that you're going to have to cover up to that deductible. And when you're a company like ours, we're mitigation. We're the first ones in. We're the first ones that start that deductible accumulation process. So the payments are going to have to be made and agreed on ahead of time, because there's no guarantee that the HOA is going to go above the deductible. So many times I am asking for deposits. I'm asking for, again, letter of credits to ensure that we will be able to get paid. And that's the reality of the new world that we're in. And then also, we understand how hard it is for insurers to actually pay, even when we believe they should. And again, this isn't to bash the insurance industry. It's really just to prepare your managers and your HOA boards to understand what they're walking into. And so, when I circle that back into the pre-disaster partnership that was discussed here, it is much easier to have a relationship or to have asked the difficult questions ahead of time. And when I mean that, I mean from the perspective of the president, of the manager. You can ask the companies much harder questions now and try to really vet them, because you also obviously need to find out if that company can handle your property. What's their capabilities, and then hold them accountable to any pricing ahead of time, right? We all have heard the story of price gouging during insurances. It happens in every industry. It happens at the gas station. So a way to avoid that is to get into these partnership agreements ahead of time, where we, the vendor, the mitigation company, are promising, number one, service during the hurricane, and number two, this is our pricing or our price list, at least in that situation. So again, the situation with insurance has only put more responsibility on the boards and the association to ensure that they are getting in bed, for lack of a better word, with the right company, because now the insurance is not going to be the one managing them. The client, in my case, I'm the mitigation company. My client is not the insurance company. It's you. It's the HOA boards. It's the property. It's the managers that are there. You're my client, not the insurance. So of course, we will work with insurance companies and with their engineers and all the other expert people that they bring on board. But in the end, the relationship is really is the mitigation company working for the vendor, working for the property.
Yeah, and you mentioned that line. At least for the condo side, even though with the structural integrity reserves and so forth, those are only utilized for that. Many boards, well, now we have cash, and we could do what we need to do. But the truth is that that's just for that. So, we're always advising our clients to either have some kind of line of credit. Those that are very forward thinking, already have some kind of hurricane reserve fund already set up, slowly, gradually setting up to be able to cover some of these deductibles. But, as Matt mentioned several times about the fiduciary of a board member, when water hits anything, the first thing you need to do is mitigate that. You need to stop wherever that water's coming and start treating it. And many times, they fall under the thought process of, well, we'll just cut the drywall. And it's not that simple, because it really depends. I'm sure you can go deeper than I, Manny, into it of, gray water and rainwater and so forth. But, having that immediate response is so important, so important. And especially in the midst of hurricanes when, people come down, you don't know who you're dealing with. That's the importance of having these pre-agreements, because you don't know who you're dealing with. And at that moment, you're under a certain level of pressure to get things done, because the residents are putting that pressure, whether it's an HOA or a condo. And having these relationships earlier on is so important. I want to keep it right here with you, Manny. And I wanted to know, I guess, from a facilities perspective, what are some of the top vulnerabilities that you've seen? I know you guys service on the West Coast too. Whenever there's major hurricanes, you probably have maybe more experience. Fortunately for us over there from hurricane stuff. But
lately, absolutely. Yeah.
What are some of the vulnerabilities that both condos and HOAs should address, let's say now, before any storm does hit?
Yeah, so if you're anywhere near the water, obviously, storm surge and flooding, as Matt could attest, it's a different policy. So trying to do everything possible to avoid it. And there's a very growing industry right now, which is the flood barriers industry. Yep. So that's something that I think facilities can take a look at to avoid. But then on the wind side, obviously, we're looking at anything having to do with roofing, anything having to do around windows, and making sure that your windows are sealed properly, are extremely, extremely important. Obviously, we have a lot of concrete restoration. That's kind of part of the 40-year cert side of this. But if your concrete is already having issues, that now affects the building enclosure, where again, that wind-driven rain or the hurricane of winds can affect now the water moisture coming in. Drains. The other thing that I see very often is the rooftop drains are not properly sealed or filtered. And then as soon as the storm brings in debris, it covers those up. The roof becomes essentially a pool holding holding pool, that weight collapses now the roof, and then you've got a major issue. Same thing with rooftop units. On the AC rooftop units, as you know, we also own an air conditioning company, and rooftop units that are not properly fastened to the roofs, or again with the wind moving them, now that becomes a barrier, or not a barrier, but an entry point into the water, for the water into the building. So, really taking a look, and again, you can say, hey, we'll assess it as the threat comes. But with the amount of things that you have to do, just the basics of moving, people, moving pool furniture, all those type of things, you don't wait till the last minute to try to figure that out. Don't wait till it's a Hurricane 5 when you realize, wait a minute, this is a Hurricane 5, and now we need to do that. There's another growing industry right now is the resiliency side of this, right? How do you prepare your buildings? And there's outside consultants. There's guys like Matt too. For instance, in part of our pre-disaster partnership is that we walk around building and start to, if we could see something that just screams at us, right? We're not an engineer, we're not a building expert, a roofing expert, but there are things that are just very obvious as we take a look around that we have seen through our experience. But I would consider getting your experts involved in each one. I mean, especially if it's a building or a large community, you have buying power, and part of that buying power you can utilize ahead of time, right? You could say, hey, you're going to be our roof of choice, or one of our roofers of choice, but we would like for you to give us an inspection right now. Give us an idea of what how the status of our roof is, things like that. So it's really about preparing. It's easy. It seems like I'm saying this late, right? Because it is September now, and we are now, firmly in the midst of the peak. But it's better now when we're not in that cone of disaster. Do it now. It's not too late until the storm is here, but definitely don't wait till the end. And as far as I can't reiterate enough, don't wait for a mitigation company till after the storm. Go ahead and do your vetting process now. And if you can sign up to these agreements, I can tell you I'm not the only one that does. The buyer response is not the only one. Almost every company has some form of an agreement, and you want to go ahead and get that agreement in hand. I think later on, if you want, we can discuss a little bit of what to look for in a mitigation company. But for now, that would be my advice: is really prepare properly.
Yeah, that's one thing that, our industry, people don't notice it, that there's a big benefit in community association where people do work before they're even getting paid. In the sense, I know you assess the property. I'm going to fling it right back to Matt on what they do in the pre-setup, but you don't hear this in any other industry where people are putting in the time and the work, the education that's necessary. And many times, something that you miss out on, what's the tie here? What's the benefit? And the benefit really at the end of the day is we understand that we're all servicing nonprofits. And what we're doing is trying our best to really provide a great service, and the associations need to take advantage of it, because if you don't, you're going to be in a very difficult spot. So Matt, I kind of want to throw it back to you. I know you guys do some hurricane prep stuff. So why don't you talk a little bit about what you guys do, and what are some of the steps managers and boards should be cognizant of, or be, how to foresight?
Sure. Thank you. Yeah. So to echo a lot of what Manny was discussing before, I think I think we would agree that really comes down to maintenance from a claim perspective. What have you been doing to maintain the property? How have you been taking care of the mechanicals, the HVAC system, any of the fire panels or anything that's revolved around pressurized water systems? It really comes down to all of that. Windows, roofs, the structure itself, whether it's a stucco exterior or whatever else. What has the association done recently? And how have they maintained their property? That's what every claim eventually gets to, right? We get these big RFIs after big catastrophic events like that, or even pipe breaks. And the insurance companies today, they just want to basically, my opinion, our opinion here is that they pre-loss underwrite the policy again, right? Whether they agree with that or not, I'm sure they never agree with us that we describe it as that, but they're looking for information, right? They want one of the number one things I can tell you from all the RFIs we've seen after the past couple of storms. First thing they ask for is all the structural integrity reserve reports. They want to see, right? They want to see. And now that was something that we discussed a couple years ago when the SIRS legislative changes occurred, and it was ratified into part of the Florida statute here. And we said, well, that's going to give an eye-opening, or an opening into what's going on at the association level and how they're maintaining their properties and things like that. It's going to be part of underwriting. It's going to certainly be part of claims, and here we are. So I think, again, wrapping that up, maintenance is very, very important. So pre-loss or pre-disaster planning should also include, a lead up to that, which is what have you done to maintain the property? How can we maintain the property better? What else should we be doing? What are other associations doing? And these are the things we talk about with the associations when we do have these meetings. And that's important. I think, I have associations that call us every year just before storm season. We the first couple of months before storm season. So let's call it March, April, and May, it's 3 months, but those months are full of meetings where I go to properties and the property manager brings their team. We grab breakfast or lunch, depending on the time of day, obviously, and they bring their team and we talk about these things. What's going on? Even to who's going to pick up all the heavy, loungers on the pool deck, and where are they going to go, and how are you going to fasten them so that they don't fly around in these hurricane force winds and break other things. As granular as that, sometimes we get into those conversations, right? And so part of the pre-disaster planning involves working with your team on the property, explaining, the things that we saw last season, what we might see this season. We have presentations that give all those stats and all that information from the resources that we use to track that stuff. And then also, we talk about the status of the property that day. Do we document? Do we take pictures? Does anyone drone the property ever? Do you need us to do it? We want to make sure that when a loss happens, we know what was there before. So there is no issue of fact. There's no issue as to whether or not it was pre-existing or caused by the storm. So those are all important things. And now, is that tangible at the moment? Usually not. Usually it's just good practice. But when a claim comes, right, you have all that information at your fingertips. It's ready to go. You don't have to worry about it. And when I talk about the RFIs, right? Again, I'm just speaking from a claim perspective. The RFIs include all of that stuff, but also include what you did right after the storm. So you can have all the best planning, but then you have to execute on it right after a storm happens and go through the SOPs or the processes you put in place to do that. And I can tell you, going back to what Manny said before, if you look at your duties after a loss or duties in the event of loss, however they worded in your policy, it'll tell you exactly what you need to do. And number 3 or number 4 every time, in almost 100% of commercial property package policies or association property policies, number 3 or 4 says you need to mitigate the loss, right? And so you execute on all those things pre-disaster, and then if you don't mitigate the loss as fast as possible because you can't find anybody that can come, your plan wasn't very good, right? You didn't execute on what you guys had talked about before the storm or the catastrophic event. And I bring that up again.
If I can interject, I've actually been, and this is multiple times, I've walked into either homes or condo buildings, and they are the management and the board has decided not to do anything until the insurance shows up. And when I explain to them that it's actually in their policy to prevent further damage, to mitigate, part of the mitigation process, for instance, is putting a tarp. Part of it is collecting the water, starting the drying process. There's a long list of things that you could do proactively to avoid further damage, and it's something that it's in your responsibility. So there's this fear that I can't touch my properties until the insurance comes out. Well, part of that is it's a hurricane. Good luck. I mean, I know they have a legal necessity to assess your property by a certain time, but that doesn't mean they're actually going to do that. And definitely your clock is ticking. You mentioned, Rafael, you mentioned earlier water. Well, water within 24 to 48 hours can start to begin the process of mold, which is now the secondary damage, right? The primary damage is the water, but the secondary damage, then now we start getting into these policies where they say they won't pay for the secondary damage if the mitigation wasn't done. So then you're so scared to call them or to start doing any work without their approval, yet it is something that they can use against you to pay you. So it's your responsibility to protect your property and mitigate as best you can. Obviously, Matt will speak about the importance of documenting, and that's another reason why it's important to have a good company assisting you in that documentation process, which obviously as the mitigation company we do, And I know with Matt, not to speak for him, but I know they're part of that process as well, collecting data, so that the story is very clear by the time they arrive on site.
Yeah, the goal, the intent of a policy, very just to make it very simple for property managers, for associations, for boards. The goal is that you have to prove your damage. If you cannot prove your damage, then you're not going to get paid. No matter how you fight, or how you try, or how hard you try to push that through the insurance company. If you can't prove your damage, they're not going to pay you. It's very simple, right? So to Manny's point, and to what I mentioned before, not only is it your obligation as a policyholder, you have to prove your damage, on top of that. Meaning, if you don't do the mitigation, when the adjuster does get there, if you for whatever reason you think that you shouldn't do anything until they get there, they're not going to see anything either, right? Unless it's visibly damaged, and that sometimes doesn't manifest. Sometimes you don't see the damage behind the drywall until you rip it out, right? Sometimes you don't see flooring and other things in common hallways. Like if there's a carpet there, that doesn't mean that carpets are going to stain because they were full of water in the first couple of weeks. That might come later. That might come a month later. The adhesive, all the dirty water, all the things that are now mixing together that leave that stay on top of the carpet, for instance, right? Then they dry up. Then you start seeing stains. But if you don't rip it out because it's wet, right? It's not going to matter when the adjuster gets there. So that doesn't make any sense from a claim perspective to our points here, collective points here. But also to kind of go back to the fiduciary standard, right? You have to meet your fiduciary standard as a board member, and this is a fiduciary, again, a financial product that you have to use, and you have to comply with it. The contract policy, I try to remind boards, a contract policy for insurance is a unilateral contract. You don't get to change the language, you don't get to change the terms of it, right? You take that product as it is and you pay your premium. Then you have to adhere to it. So it's a unilateral contract of adhesion. You have to adhere to the contract, right? Now, that doesn't mean you don't have rights. It doesn't mean that the insurance company doesn't have to fulfill their statutory obligations or contractual obligations either. But today, more than ever, it's so hard to understand that. And I'll go back to an example that again, Manny has heard me call him on a Friday afternoon to complain about. But they have endorsements now in the state of Florida for mitigation specifically, which I mentioned before, the word reasonable, where they say you have a sub-limit, okay, let's call it $10,000. And think about the associations that we represent, Rafael, right? And Manny, like a $10,000 sub-limit for reasonable emergency measures.
Wow.
So if you have a hurricane deductible in the state of Florida, it's either between 5 and 10%. Let's say your building's worth $1 million and you have a 10% deductible, right? That's $100,000 for a hurricane deductible. And they're only going to give you $10,000 for whatever they think is reasonable to mitigate your property. Think about what I'm saying.
That's insane. I mean, that's insane.
That's a circular discussion all day, right?
Yeah.
It's never going to end, and that's to their benefit. That's to their advantage, obviously. And unfortunately, you can try to increase it, right? That's what the language says. You can increase this limit by showing us evidence and documentation and things like that. But when these endorsements are in policies, every single time with the association, they tell me, what should we do? I say, you have to mitigate your property, right? And then they say, yeah, but it's going to cost $50,000. Doesn't matter. You got to clean it up no matter what. You can't look at it as, am I going to recover this from the insurance policy? That's not the point. The point is you're a fiduciary. You have to clean up the property. Does that help you with your policy obligations post-loss? Yes, you have to. You're obligated to mitigate, right? Now, the second thing, unfortunately, that also comes with this is that, and this is more for Manny than in the mitigation industry, right, is that the boards then tell me, all right, well, we can't pay our bill or not. We're not going to pay our bill for mitigation until, we get a recovery from the insurance policy. Unfortunately, again, probably it's under deductible. And if you don't do the work and don't pay the bill, then they're just going to go in a loop and tell you, oh, it's not reasonable for this reason, whatever they want to make up to do that. So it's important that you have the right team, is my point. You have the right representation to give you the answers as to what to do, how to proceed through that process. And ultimately, you got to pay your vendors. So instead of asking me, when can I put the drywall back, pay your mitigation vendor so we can say this is an incurred expense. We've already paid the bill. Please make payment for this, or consider this entire amount for our deductible, right? Let's get past the hurdles here and get to the place where you are actually making a recovery. And so, at the end of the day, if you understand what I'm saying, it's so difficult to navigate this entire process especially after a storm. I mean, look, the 718 statute, Rafael, you can correct me if I'm wrong, it does not allow associations to self-insure. You're not allowed to have any self-retention. But the insurance lobby went around and figured out a way to so naturally make that happen. What I mean is hurricanes, the topic of today, right? You have a 5% or 10% deductible. I have properties that are appraised recently that are almost $300 million. They have a 10% deductible. So the first $30 million in a hurricane is on them. But I think Manny knows, Rafael, you know, if that property has $30 million in damage, everything around it is destroyed.
Yeah. 100%.
$30 million in damage is a lot of damage, right? So we have other issues, but that's besides the point. But I'm just trying to paint the picture of the situation. What at that point, think again, as a fiduciary, as a board member, what at that point is the dollar amount where you actually put in a claim? Is it 35 million? Probably not. You're not going to spend 30 to get 5. That doesn't make any sense, right? Is it 60? Is it double your deductible? Because if you have $60 million worth of damage, again, we have other problems. We have other problems with the area, Miami, right? Tampa, wherever the storm is. And so I bring that up because you got to put sometimes into perspective. It's not hard. I mean, it's not very easy to get a recovery from your insurance policy. When you're talking numbers like that, it's exponentially more difficult. Not because the damage in there or whatever. It's just the number. It's just the dollar amount that the insurers then start to pivot and say, well, we can't pay this. Sometimes they don't have the money, unfortunately, right? Yeah. And that's a whole other discussion we can have about consistency and the integrity of those businesses and their balance sheets, right? We can talk a whole discussion, another hour. We can talk about that. But again, to wrap that up, to just my final point, wrap it up. You need the right team. You need the right management company like Affinity. You need the right mitigation partner that understands what to do and how to document it, to Manny's point. And then, self-serving a little bit, but from our perspective, you need the right representation to make sure that then you can recover and overcome those obstacles that the insurance company has put in front of you for something that you paid for. Remember, you paid for it, right? The association paid for this.
Yeah, thanks, man. I mean, that was very deep there and a ton of nuggets there. I can tell you from my experience, we have Cheryl here asking at one point, do you call in a public adjuster? In my opinion, you call them in now before you have an issue. Because, when I started this company, I actually managed properties when I first started it 18 years ago. So I know what experiences my managers go through. I know what experiences board members go through, not just an owner that sits up. I went through it. So I specifically have an experience where it was only 35 units that were flooded, right? It was a fire sprinkler. Someone put a wedding dress, it was on a sprinkler. It screwed up her wedding, but that's a whole nother story. 35 units were flooded, 35. And luckily for us, we took videos, we did all of this because by the time the adjuster got there, they were painting the exact same story. Oh, there's no rug, there's no this. Oh, this is only going to be $80,000. At that time, we didn't know each other, Matt, but I knew someone else, a public adjuster. We had them on early. And the claim went from an $80,000 claim to what it should have been, which was over $1 million. And that was because the cables for the elevator were wet. And those cables, once they get wet, they must be changed. So why do I give this story? And the story is important to state because a lot of times boards feel like, well, I don't really need a public adjuster. And these are things that if that association did not have a public adjuster, there could have been a safety issue later down the line, a major lawsuit, or they would have missed that opportunity for something that needed to be fixed from a safety standard perspective. And I personally believe that many times they put you under this pressure if you don't have representation, because they know you're going to budge. They know you're just, okay, let's just settle it. And once you settle that, if you don't have the right representation, you're releasing yourself from ever filing a claim ever again. So I've experienced that myself when I started the organization. So Cheryl, if you haven't done so yet, I ask that you reach out to, Matt and his team and just get a pre-disaster agreement done. That way you can have the right assessment. And again, one thing we haven't spoken about, and it's important as well from our perspective, from the Canvas perspective, we tell our managers all the time, you have to be very careful. It's better to have the public adjuster file a claim rather than having the CAM call in and file and make a statement that shouldn't be made. Or if you're going to make the statement, make sure that you've already had the conversation, because just one wrong statement, oh, we had water damage from XYZ, and you're not reporting it right, they can automatically use that as saying, well, that's not something that's within the policy. that's not going to be covered and whatnot. So it's very important both for managers and boards that, again, this is why I enjoy having these webinars, is because there's a lot that goes into this, and you guys are the experts. We're the experts at orchestrating, is what I like to say, but we're not the experts in insurance. We're not the experts in mitigation. I don't care how long you've been in the industry, you're never going to know it all. So it's important to have the right partners in place when it comes to these kinds of things. Manny, I want to bring you into the conversation. I know with regards to communication, so I know some of the things CAMs have to deal with is you guys, you normally come in, you bring in your machines, you dry things up. In some instances, you have to make holes in the walls and so forth. Tell me some success stories that you've seen where that some communication pattern or because residents feel that they're drying their unit. Okay, let's plug these holes. Let's put the baseboards back up. Let's get everything up and running in 3 to 4 days. And unfortunately, it just doesn't work that way, especially when you're filing a claim and so forth. What communication strategies do you put in place and that you've seen some successful managers put in place?
Definitely clear lines of communication, right? There's been plenty of times especially in large losses, where there is, they just pretty much put you with like a lower level maintenance person, and yet you've got a lot of coordination that you need. So I'll tell you a story of a very large loss. Actually, Matt was there as well, where initially they did that exactly. They put us with the maintenance person, but yet this was a multifamily, so there's rentals there, and we are asking 200 units. We have to assess 200 units, which ultimately we ended up having 150 of them were affected. So you have to coordinate with all these unit owners, or not owners, but renters, to get in the building. They also, the other thing is too, when you're dealing with lower level employees, there's policies in place, and they don't want to break those policies. But I think everybody here can agree that there are times that you have to go outside of your policies when there is damage, when there is emergencies that come up. So for instance, in this particular case, we only had, out of this 37 floor, all these, all the 200 something units that we have to look at, where we only had one of the 7 elevators, right? So after 2 or 3 days of attempting to communicate to them, I had to go straight to the property manager and said, we need better communication. We need somebody that can actually get things done. They had one key, for instance, they had one master key, one fob for the elevator, and one fob for the units that were empty that we had to assess, right? You could see the bottleneck that was being created here, right? So now I'm on staff. From the get-go, we knew it was a large loss. We had over 100 employees there, but then we have 80 of them sitting downstairs because we can't get them into the units or even into the building. And at that point, that's when we had to have a very serious conversation that if they want us to work here and do what is asked of us and what we're supposed to do, we're going to need more resources on their end, right? And so at that point, the property manager assigned us a particular person to communicate directly with the tenants. We were given fobs ourselves. We were allowed to go in 3 of the 7 elevators. When it's these moments of high intensity and high stress, and as I said earlier, time is of the essence, not only for mold and secondary damage, but you also have all these renters that are expecting to, at the very least, have an assessment and be told what's going to happen in the future. And I think nowadays everybody's very, very aware and educated about the dangers of mold. So when they have a lot of water in their properties, they're scared for their health, literally. So the risk level, the anxiety level starts to rise. So back to your question, it's really about assessing what is needed and what type of communication. Are we talking to minute to minute communication? Do we have multiple people that can get things done in a building, involved in this process, and really coming up with that plan? Again, if it's a hurricane, you're thinking it's not going to be a few units. It's going to be most probably a very large loss. So all this can be looked at ahead of time through what we call, or what's called, a tabletop simulation, right? If you were to sit there and have your top managers and top personnel involved ahead of time. And this is something that we also offer as part of our pre-disaster program, and just go through the whole process. So start from the beginning, from setup or pre-hurricane time to all the way through hurricane has been hit. Now we need to get the ball rolling, get our vendors in here, communicate, so on and so forth, all the way through the whole process where it's completion. And we're doing this at a table, calling out the people that are responsible and asking them what are they going to be doing? Do they even know what they're responsible for, right? So again, I just threw a lot at you, which is a real world scenario, but also I've given you how you can try to mimic or look at an actual situation and put that into a preparation study, or activity, I should say.
Correct. Yeah, I can tell you, I know here, we have templates that are already designed, and our managers customize it based on their particular properties, from pre-storm to after storm. What communication platforms are we going to use? Some boards are willing to pay a little bit extra for the text messaging. The emails are obviously something that's free. What are the protocols that are going to be followed? We're going to have a Teams meeting, a Zoom meeting for the association to keep residents abreast of what's going on. And especially after the storm, that's when it gets really difficult, because I gave you that example of like the holes and so forth. Many people think, okay, well, that's it, they're done, we move on. And I'm sure Matt will talk a little bit about, they have to go through their process of really assessing what the damages are. What needs to be, once it's dry, that's one step. There's still a lot more that needs to go into it. In some cases, you have to bring in experts to truly, I'm sure you've done it, Manny, where you're doing, the mold testing in some instances, because even if you dry, there could be the instances in areas that you weren't able to dry. So it's important to have that. And nowadays, it makes it much easier, especially after COVID, that everyone's on some kind of online platform. But it's important to be open and honest with the residents and explain to them, whether it be by town hall, bring in the mediation company, bring in the public adjuster to talk about why things are being done. And again, I don't want to keep harping on the importance of representation, but I think it's important. I know Matt has spoken about it a ton of times. He touched it a little bit during the conversation of how you could start asking for certain payments as you're doing some of these jobs. So Matt, I'll kind of let you jump in there. I know that you guys focus a lot on trying to get payments, even if it's not the final number, but at least you're working your way so that the vendors are getting paid and so forth. Maybe you want to touch up a little bit on that.
Sure. Yeah, that's a great segment, great question again to bring up now, because to your point, if you think about the stages that I mentioned before, right? You have obligations that you have to comply with as a policyholder. You have notice requirements and those obligations as well post loss. And so if you don't do those things, then you can't support your actual claim, which is the intent of the policy. As a policyholder, you have to prove your damages. So you need to get a mitigation company like BioResponse, and you need to get in there, let them do their job, coordinate whatever whatever is the most efficient way, most expedient way to let the mitigation team get in there and do their thing. And then while they're documenting all that and finishing that up, there's certain times where we live in South Florida, that sometimes you can't help it. Mold manifests as you're doing that stuff, and you have to get the right experts on the mitigation side to come in and take a look at it. Mold assessors that provide, or hygienists sometimes that provide protocols to cleaning that out, and that makes the thoroughness, I should say, of that event much better. And I need that data because I need to support the claim that we're going to make on the other side, which is the question I get next: when do I put the drywall back? When do I put the baseboards back? When can I do this? When can I do that? Okay, but I need the information from a claim perspective that the mitigation company compiles and collects and supports their what they've done, right? Their invoice and their bills, and I need to take that and be able to present it. In the meantime, yes, we can, and we do. It's part of our strategy. We do ask for payments because the insurance company should be providing some type of relief if we know, for example, that it's going to exceed the deductible. The question is, okay, well, we know it's going to exceed the deductible by double, by triple, by whatever number it is, right? We can see that and kind of build a ROM or a range of magnitude and understand what's been affected and what the costs are going to be just from a mitigation standpoint. That should be, one of the first things that the insurance company pays for. It's an obligation. It's necessary as a policyholder to do that. And so, they should pay for that first. Why not? If the mitigation company, like my response, is organized and they can get you their information, all the pictures, all of their work, itemized how it needs to be itemized, and can provide those reports to you with their invoice to support that dollar amount, the insurance company really, they should make payment there, even if it's half or some type of percentage of that, right? That's an emergency advance at the end of the day. FEMA does it right away. They typically try to help out insureds in a flood situation. They try to give an advance right away. And to give you an example of a different type of claim during or after a storm, right? But in the property side, we almost always have to have a little discussion about that with the adjuster. And today, unfortunately, they've taken most of the authority and the power from the field adjusters. So this is our new strategy. No matter what you say to the field adjuster or how the discussion you have or how agreeable they are and whatever else, at the end of the day, they're sending a report, I should say, not the report, a report to the desk adjuster in Indianapolis, or in a lot of instances when it comes to citizens, they're in Alabama or Georgia. They're not here. And so the problem with that is, again, you're playing telephone, right? They're getting some information from the adjuster that might be rushed because they have timelines that they have to comply with as well. And they're only getting some of the actual loss and damage. And it gets muddied and muddled down, I should say, when it gets to the desk adjuster, because they haven't been there. They haven't seen it. They only know what that report says, and that's what they're going to go on. And so, again, it's important to be able to say, hey, we need $1 million advance. Here's the to-date charges, incurred expenses from the mitigation company that need to be paid. The insurer is doing everything they can to comply with their policy and to mitigate this loss and to recover. You need to help out now, right? And so, so an advance is very, very important. It sets the stage, right? Almost sets a floor if you look at it that way. And then the rest of it can come later. I think a lot of boards, when they have this deductible phobia and then the premium phobia, they then dovetail into this whole, how long is this going to take, right? How long is the process going to take, right? And so, I try to break it down. As a fiduciary myself, I'm talking to the fiduciary for the association. I have to give them the right information. And so I always try to say that there's two answers here, right? I'm your fiduciary for the claim. I'm going to tell you how to prevail on the claim and what you need to do. You're not always going to like what I have to say, but I'm going to tell you how to prevail and make sure that the insurance company doesn't have any defense that they can lob or a way to disclaim coverage somehow. Those answers are typically not very favorable to the board because that means you have to wait. You have to wait. I need the mitigation information. I need to ask for advances. I need to get the adjustment going, right? And on top of that, then I need to get them to start making payments, like undisputed payments, which is a payment that the insurance company, to the word, does not dispute is the loss and damage from their perspective at that moment. Doesn't mean it's the end of the claim, but I need to get from an advance payment to an undisputed payment. So now we have an understanding of what the insurance company has basically, that's their floor. And I can maybe figure out, just doing a little math, what their reserve might be. And then it becomes a matter of proving the damages even more after that, right? And so, yes, to your point, we're trying to get cash flow. I look at it as a business transaction. I'm trying to get a cash flow for the association so they can manage their current expenses. I want to get this on recording here, but that doesn't mean you don't pay your vendors though. That doesn't mean you don't pay the mitigation company at the time. Doesn't mean you wait to get money from the insurance company to pay your mitigation companies or any plumbers or anybody else that comes to the property to help out with the immediate claim. I think that's kind of gets lost in the translation here. Just because you don't get a recovery at the moment doesn't mean you don't have a bill. That's how we need to look at it, right? And so my mitigation companies, unfortunately, they sometimes have to front a lot of these costs. They've already done the work. They have employees they have to pay. Like they're already past that number. That's not a future number for them, right? That's incurred. And so, going back to my point before, the insurance company needs to know that you paid that bill too, because then they have to do something about it, right?
That's right. And
so again, there's three kind of parts to your question. First part is the mitigation, comply with your policy, get the right vendors in there, whether it's a plumber, a roofer, whoever, right? Get the mitigation company in there right away. Buy response, can come in. They'll give me. I know their documentation. It's exactly what we need. So I know their reports are going to do very well for the claim. Get them in there, but again, you have to pay those vendors, whether it's the mitigation company, roofer, whomever. They did the work. It's a little different than what you're talking about with us because we're on a contingency basis, right? It's a little different. So to your point before, the condo world, yeah, we're working for a nonprofit. We have a little bit of leeway there when it comes to things like that, but that doesn't mean you don't have to pay the bill.
That's right.
So the second part is, okay, now we've gotten that information. We can ask for an advance. Let's start getting the ball rolling. Let's get them to give cash, right? Once they give $1, They're admitting that there's coverage to some degree, right? Whatever that degree is, we don't know yet. But they're going to make payment for this claim, right? So we get the advance. We hopefully get work with the adjuster to get their reports into the desk adjuster to get an undisputed payment. In the state of Florida, they have statutory requirements when it comes to the submission of their own experts' reports or their own contractors' reports, meaning they have to reply to the association within a certain time once they get their estimate from their field adjuster. They have to make payments on those estimates within a certain time, right? Someone needs to be managing these for you as the association. You can't expect your property manager to understand all of that, those time periods, all of that part of the 627, 626 statute. You can't expect them to understand that. They don't do this every day. We do it hundreds of times a day, right? So that's the second part. What's going on? Have we gotten an advance? Why can't we get an undisputed out? Why can't we give money out to the association for this? The third part is finding that settlement offer and getting the insurance company to get there, okay? And so there is sometimes a big, let's call it a lull, whatever you want to call it, between the undisputed payment and the actual settlement. And there's reasons for that sometimes. Sometimes it's a negotiation strategy. Sometimes, the insurer is delaying for whatever reason, and there's 4-page RFIs that are asking for, we're getting RFIs right now, Rafael, I don't know if you've seen them. They want 15 years of managers' reports, 15 years of meeting minutes, 15 years of financials, right? And they're taking advantage of the disclosure amendments
Language,
that have recently come.
And just for those that aren't aware, RFI request for information.
Yes, RFI, I'm sorry, yes. So some of those records, though, you don't have to keep for more than 7 years, right? Some of those, they know this, right? But they put you in a situation where they know that you can't give them 15, right? So it's a rock and a hard place. So they say, okay, you gave us 7. Let's say you comply with the best of your ability. You're in control and possession of 7 years of documentation to the RFI. You give it to them. Oh, well, we asked for 15. We need to come there and do an inspection of your books and records, and we're going to schedule that, and that takes another 3 weeks. Like, this is gamesmanship, right? These are the things. You can't expect your property manager to manage all of that. It's first, it's not fair. It's not their job. And second, that's why you need representation, and especially working with a public adjuster just in general, and our team here at GlobalPro, right? We're working on a contingency basis. So you don't have to pay us unless we recover you money, right? And so all those things, again, that's the advantage of working with a public adjuster when these things happen. I'm going to make sure that the file that we create is very well documented, it's very well supported, that the claim, the report, the estimate we put together is very precise, it's very comprehensive, and we're going to make sure that you comply with your policy. So you meet your fiduciary duty, right? Mm-hmm. And hiring someone just in general is a way to get to your duty of care, meaning when you do a lobby renovation, is the board going to take that on? You guys are going to do it yourself? You're going to make the manager manage that project? No, right? You can't do that. You have to hire a GC. You have to get bids. You have to think about what that's going to look like. You have to take votes. There's all these things. Why you wouldn't do that for a financial situation that could be detrimental to the association's balance sheet doesn't make any sense to me, right? So to your point before, I'd rather come in the beginning. Let me handle the notice of loss. Let me handle how the loss gets reported, the narrative. Let me handle all the inspections. Let me make sure that we're doing it properly, prudently, and to the best of our ability, which will certainly help you as a board member, reach your fiduciary duty, your duty of care.
Awesome. Thank you, Matt. Always thorough and detailed. Love it. All right. Well, we're coming up here at the end, so I think I'm going to launch a poll here so we can rate the webinar. Manny, let's start with you. How can the listeners contact you with regards to your pre-disaster agreements or any questions they have? What's the best way that they can reach you? And then, Matt, if you don't mind following through.
Yeah. So, one of my big selling or, differentiators between my competitors is that I say that we're a 20-year company. We can do any size job. We're local, we're independent, we're not owned by any other property management company, and you can call me directly, right? I'm one of the owners, 786-252-5207, 786-252-5207. My email is manny.pozo@bioresponsecorp.com. Website is bioresponsecorp.com. You can call me directly. Another great thing about being an independent local company is that we'll do any size job. We could do any size large job, and we could do any size small job, even if you just need us, as we've just proven right now, to educate and just walk you through a process. call us if you think you have mold, if you think you have a situation. Either me or one of my project managers will go out and we'll do an assessment, a free visual assessment of any situation.
Excellent. Thank you. Always a pleasure to have you on, Manny. Matt?
Thank you. Thank you for having me.
Yeah, absolutely. Thank you. And so I echo some of Manny's points there, which is I think is very, very important in this day and age, which is, we are a small business. We always say we're the smallest, largest business you've ever worked with because of the claims and the matters that we work on. But Global Pro is independently owned. We're not owned by anybody else. We certainly have relationships out there in the industry that are long-standing. And so most of the folks in the property management world, know who we are and have worked with us in the past almost 15 years. And so we work on word of mouth, as you guys know as well, just like you guys. It's really, really important to understand that you have to have clear lines of communication, as Manny said before, and as Rafael always talks about when it comes to your team and your vendors. For us, same thing. You can call me, you can call the office, you can call anyone on our team if you have any issues, questions, or need help. We're always here 24/7, 365. And this is all that we do, right? And so you can reach us on our website, globalpro.com. You can reach me on my cell phone, 301-758-9563. My email is mms@globalpro.com. Or you can always just send all emails to recover@globalpro.com. We're also on LinkedIn. We're on YouTube. We don't have as many subscribers as Affinity, so I gotta figure out what's going on over there. You guys are getting that high. It's good. But we have I think it's important to note that we are accessible and available everywhere, right? We are a reputable company, not some fly-by-night firm here. And I think that working with Affinity, working with Buyer Response, you flow with the company you keep, right? And we work with the best of the best, always. And I think what you'll find in all of our companies is exactly that. We're accessible, we're open, we're transparent, we're here to help, and we're available. Thank you very much, guys. I appreciate it.
Always a pleasure to have you on. Thank you all for taking the time to gain some additional education when it comes to hurricanes, the impacts of having the right infrastructure, having the right insurance, understanding what you have. We couldn't have two better guests than Matt and Manny, so thank you both. For us, you can reach us at managedbyaffinity.com. As both gentlemen mentioned, same small company but big company at the same time. So really looking forward to continuing to our next webinar. I mean, we could have talked about this for another hour and a half, I'm sure. But in respect to you guys' time as well as our listeners, we'll go ahead and cut it short. So for those of you that maybe your board members couldn't attend, we will have it up on our YouTube page at managedbyaffinity.com. Make sure you subscribe, and we'll see you at our next webinar. Thank you all.
Thanks, guys.